Hey everyone, in this video, we're going to be talking about the top 5 publicly traded sports stocks that you can buy on the open market today. Now, before getting into it, I'd really appreciate it if you like this type of content, if you could subscribe to the channel, like the video, comment on the video with your thoughts. We're still a small channel, so that really does help us grow and get in front of more people. Now, jumping into it, before going into the 5 stocks, I just wanted to talk about this asset class in general because it's definitely a bit of an unconventional space in the public markets. Sports teams and sports assets are mostly and predominantly held privately, and they're really scarce. It's only so many leagues in the world, only so many teams within those leagues, and primarily these assets are highly sought after in the ultra rich communities of the world, and they don't necessarily trade at normal price to earnings ratios or revenue multiples that we may see on other types of asset classes or industries in the stock market. So let's keep that in mind when going through the 5 stocks today, and we'll recircle back to this slide at the end, and I'll kind of give my thoughts on this space, whether I think it's a good investment opportunity, what needs to be true for this investment class to outperform the market, and so on and so forth. But without further ado, we will go into the first stock today, which is Endeavor. So Endeavor, for those of you who don't know, is primarily known for owning the UFC. That's probably where the majority of their value of their stock comes from, and we'll go through their stock as well. But just to give a bit of an overview of the company, Endeavor is split into 3 different operating segments. The first one is owned sports properties. So within this, they obviously have the UFC, but they also own professional bull riding, some European professional basketball leagues, and with all of these assets, they sell TV rights, other kinds of things as well. They try to leverage their assets to maximize the value that they're bringing in from advertisers, sponsors, etc. So this is kind of their first revenue stream of sports leagues that they own. But as we talk Endeavor, they're primarily known for the UFC, and that's what lots of their investors are really focused on in terms of future growth. UFC has been growing really quickly for them, and that's why it's such a focus for the company. So they have UFC Fight Pass revenues up double digits, which is almost like a monthly subscription for people to have access to all the pay-per-views and behind the scenes and stuff like that. They've sold out all of their pay-per-view events pretty much, so these are like hot commodities. They can't create enough of them to max out and keep up with demand, and they continue to sign large, longer-term deals with large brands and advertisers from a sponsorship point of view, but also growing demand for their TV rights in North America specifically. So lots of things going their way, and they're just riding this wave. And we'll kind of talk about the valuation of the company and how UFC plays into it. But in general, this is the most exciting thing that they have going for them. The second segment of their business is around events, experience, and rights. So a bit more confusing, but they also own the rights to host lots of tennis tournaments, golf tournaments, other events, fashion shows, stuff like that. So they also are essentially experience providers, event managers, stuff like that for very large scale events. And they make a good amount of money doing that as well as their second revenue stream or operating segment, I should say. And then the third one is representation. So they're essentially a talent agency representing a lot of really big and famous actresses, actors, all kinds of talent and famous people around the world, which is another really big and important part of their business as well. So you'll kind of see here that even though they do a lot of things and they're going to bring in over $1.2 billion of revenue a quarter, so almost about $5 billion on the year, the company's still a bit all over the place in what their focus is. They do, talent rights, they're doing events, they're doing leagues that they own. They also just acquired, I believe it was OpenBet, which is like a betting company as well. But at the end of the day, the company's not really making money. The company's essentially break even, let's call it. They have EBITDA on the year, but their EPS is negative overall. So for me, like I love the growth that the UFC is seeing, but I wish it was just less complex and I didn't have to understand the representation business and all these other factors when looking at the company. The fact that they are looking at acquisitions and they have so much other things going on that I don't really understand, and they're not really operating at a profit, kind of puts a bit of a cloud over this stock for me, and it's the reason I don't really consider investing in it, and I'm not really sure what the future will hold. If the UFC was a standalone company, I'd feel a lot more comfortable, just given the growth I know that has ahead of it. But some of these other businesses are a bit more unpredictable. You kind of see events, experiences, and rights. EBITDA was 50 million for the quarter, down 35 million, so over 40%. So like huge swings on some of these businesses. EBITDA, even though it looks like they had some increases to their revenue in certain aspects, at least. Their EBITDA on representation was down $9 million, so about 5-6%. So I just don't get these businesses. I don't really want to be invested in a representation company and an event manager company. I'd much rather own the very valuable IP of the sports leagues, particularly the UFC. So the fact that the UFC is only about half the business right now, with events and representation being about 200 million in EBITDA on a quarterly basis, and the UFC being about the same. I just don't really know what I'm getting for the other side. It's not all profitable overall, and that kind of makes me walk away or just stay on the sidelines in terms of this name. Looking at the stock, the company is worth just north of $10 billion overall. I wouldn't trust this PE and maybe some accounting factors, because I think on an adjusted basis, they're not really turning a profit yet. They are pretty break-even-y though, so they're not bleeding too much. But at the end of the day, out of this 10 billion, I think the UFC is probably at least 2/3 of that value, even though not 2/3 of the revenue or the profit. EBITDA, I should say, they're not really profitable. And this is one that, once again, just reiterating, interesting name. Think the UFC franchise is very valuable. Wish it wasn't tied up in all the other mess that they have going on here. So this is one I keep on my radar, on my watch list, but I'm not seriously considering investing in. Stock number 2 is Formula One. So I have a Liberty logo here because it's actually under a Liberty franchise right now. So Liberty owns Formula One, but you can buy it on its own stock ticker. We'll look at that at the end. Formula One has been exploding in terms of popularity. So global interest from all over the place, fans of all ages, all genders, backgrounds, etc. And also you're seeing this come through on social as well. So 30% growth on all platforms rather across their socials, 40% growth on social media in the US, and that's the fastest growing market, which is also probably one of the most important markets given the size of that economy for a business like Formula One. And then you just look at where they're putting on events, and Formula One is truly a global business. They're in China, they're in Qatar, they're all over the US, they're all over Europe. So this is just a very well geographically diversified business and sport. And it's just really cool because, similar to UFC, you're literally owning a league essentially. And it's no opportunity to do that in North American sports with like the MLB, NHL, NBA, etc., NFL. To be able to actually own a league is something really special, and if grown and accelerated the right way, can potentially drive a lot of value long term. One thing that's really helped pour gasoline on the fire, especially in North America, is the Netflix Drive to Survive series. It's brought in a lot of new consumers into the sport, interested in watching, caring, knowing the rules, knowing what's going on. And that's just been a great partnership for Netflix and Formula One. You can kind of see some of the results here. I won't go through it all, but essentially tons of people are watching this show in so many different markets. It was a top series in 33 different markets in season 4, 27 for season 3. So consistently in dozens and dozens of countries. we're seeing super strong popularity of viewership of this show, which is not not really, I wouldn't say not expected, but it's definitely bringing a lot more people into the sport and watching the show, even if only a percentage of those people are actually giving their dollars, whether it's their eyeballs on TV or buying merch to Formula One. It's expanded the pie and the amount of people that know about the sport in lots of countries, including the US. Going into some more of their data here, since 2017, you can kind of see the competitiveness of Formula One for those who are fans has gone up substantially as they kind of put in new regulations, create new franchises, and have those franchises sold to new kinds of companies. And then the budget caps have really made it more of an even playing field, and we're seeing competitiveness ramp up. Also, the storytelling aspect and the legacy and iconicness of the sport's really grown. Once again, a big part of that is Drive to Survive, but it's also other components too that go into that. There are a lot of really great personalities in Formula One, and these live events, they may be exaggerating a bit by calling them Super Bowl like events, but they've turned into huge events in lots of these places. I think it always was in Europe, but even in the US, to see people fly around all over North America to go to Formula One races is really incredible and kind of speaks to what they have brewing there. On the right hand side, you can kind of see the growth in younger consumers, which is really important. Female growing as well as in terms of percentage of their fans. And then a lot of just new people wanting to go see a race and checking it out, probably getting into it on Netflix or whatever it may be on social media, and then saying, hey, that's cool, I'd love to watch one of these lives. So lots of new interest coming into the sport, really good thing for this company. Just looking at financially what it means, they have very similar revenue streams as like a UFC. The media rights is kind of the golden goose for media companies like this. So to see them go from 800 million to almost $1 billion in a couple years is good. I think it speaks to a lot of further upside they have when these contracts come up. And the thing about this company is they have so many different markets that they can sell media rights in, given the globalness of this sport, that I think their media rights opportunity is massive. In addition to media, they have merchandising opportunities. They do make a lot of money on that today, but I think it's even more upside there. They have sponsorships, which is blowing up. So I'd say even probably more than the UFC, they have a ton of momentum, a ton of traction of growth that they can be capitalizing on in the coming years on this business. So looking at the stock's trading at just under a $30 billion valuation. And when we look at the earnings per share and stuff like that, this company in some quarters loses money, some quarters makes a couple cents per share. It's essentially break even right now as they're in reinvestment mode. And I think even as we look out into the future, the 2023-2024 earnings expectations from the analysts who cover the stock is around $1. So you're paying a huge forward PE for exposure to this company and this business. So everything I just talked about in terms of all the upside in revenue on media rights, the fan traction being fantastic, it is definitely priced into the stock. You're definitely paying a very high cost to own a portion of this business. And that alone is the main reason why this one isn't overly interesting to me, as an investor, but love the business, love the sport, and once again, we'll continue to watch it. Going on to the third stock today, and we'll get through these ones a bit quicker, but the WWE, if you want to call it a sport or not, that's up for debate, but is a publicly traded company. This is a really unique business as well, because similar to the first two, this is like owning your own sports league. They write the scripts, they own what's going to happen, they know what's going to happen, they can make and break characters, etc. They also have a lot of different revenue streams. So What lots of people are probably familiar with is pay television. So that's like Monday Night Raw, SmackDown, whatever it may be, weekly programming. They also do reality show spin offs with their divas, documentaries with their superstars. And then in addition to that, they go direct to consumer. They have monthly subscriptions as well. And then they invest a lot on creating really good social content. I think they're one of the biggest YouTube channels in the world. They have like 100 million followers, make a lot in ad revenue there, and do a lot of other forms of media that they monetize their catalog with. So lots of things going on there. You can kind of get a better sense for it here in terms of monetizing the library, doing special events. Obviously, they do like WrestleMania, Royal Rumble, SummerSlam, Survivor Series for those of you who may watch the WWE. So they have a lot of different assets, a lot of different intellectual properties, and they're continuing to leverage their content and their back catalog to make money passively on like social channels and stuff like that as they bring in new fans to the sport. They've actually just had like a record year. For those of you who may be like, oh, I used to watch this when I was younger, I've grown out of it, it's not as good anymore as it used to be. That may be true to you, but in general, I think they've broken attendance records. They have more traction than ever on the sport. So the sport's really at a high point right now, I believe. And at the end of the day, the stock's also at an all-time high. The caveat here is WWE is currently trying or evaluating selling themselves to other media companies or people who are interested in this media asset. So if we look at their valuation, they do about $200 million in profit annually, and they're currently trading for $6.5 billion. So they're trading at, 35 times earnings, give or take. Vince McMahon, who owns the majority interest in WWE, has kind of come out and said that he wants close to $9 billion for the company. $9 billion would be about a 45 price to earnings multiple on their profit, which seems like a crazy price to pay. I imagine they'd only get something like that if there was a bidding war and a couple companies had high aspirations and plans for this business. I'd be surprised if they got that high, but we'll see. So this is a stock right now that unfortunately you don't really have an opportunity to buy at the fair value of the company, but it's more speculation on what the buyout price is going to be. And if you think there is going to be enough bidding to get the price up to, a price that'll get you a good return, whether that's $7.5 billion, $8 billion. And there's always the risk that no deal gets done, stock drops back down to, a 25 to 30 price to earnings ratio, which is probably where it was trading or where it would trade otherwise, and you lose 20, 30%. So be careful with this one if you're considering it. But still an interesting name, interesting asset. But if you're looking into riding it for the long term, probably missed the boat at this point. Going into stock number 4, Manchester United football or soccer, depending on how you want to call it, club out of Europe. And this is a publicly traded company. Similar to some of the other companies we talked, they do not make a ton of money. You can kind of see here their forecast is about 600 million pounds in revenue, and they plan to make about 100 million in adjusted EBITDA. If you look at their EPS, cut out all these adjustments going on and not including depreciation, etc., their EPS is flat to negative. Their EPS forward-looking estimates are flat to negative. So this company is essentially break even. They're not making money today, but they are also looking to sell themselves. So they're on the market looking for a buyer as well. So similar to WWE, you would be kind of speculating on what that final buy is. So there's been a lot of rumors and interest. There's like Qatar parties involved willing to bid a lot of money. So it's a bit of a gamble in terms of what will the acquisition price be. And if it doesn't get acquired, the ball drops and you lose the gamble entirely. But the stock was kind of trading $15, give or take, and has gone up 40, 50% on the news that they're trying to sell themselves and what the kind of market price may be for Manchester United, currently trading at 3.7 billion US dollars. So this is an interesting one. Similar speculation play. If the company sells for 5 billion, you'd get 35% upside. And that's really what the bet would be buying this stock in today's market. The fifth and final sports stock that you can buy on the open market today, and this one is not pending an acquisition right now. So you kind of get, I guess you can call it fair value, but just not an inflated value based off of an impending sale, is Madison Square Garden Sports Corporation. So, this company owns the New York Knicks primarily, the New York Rangers, and then they also own a couple esports leagues, a couple AHL and minor league teams, stuff like that. But primarily, it's the New York Knicks, New York Rangers. The logic here, in terms of people who have buy ratings on the company, is if you look at recent sales of NBA teams, whether that's the Houston Rockets or whatever it may be, and compare it to a franchise like the New York Knicks, people think that the New York Knicks alone can probably get $4 to $5 billion on value, and the company's currently trading for that. So the thought process is the true value of the organization or of the stock rather, is tied up in the Knicks, and everything else you're getting for free. You're getting the New York Rangers, which is a original six NHL team, probably worth over $1 billion for free. And you're getting all of these esports teams, minor league, like hockey teams and basketball teams for free as well. Whether those are worth, tens of millions to hundreds of millions, pair it with the NHL New York Rangers team they have, and probably the additional premium they get on the New York Knicks, given the amount of billionaires situated in the city. And you're talking about a stock that is probably trading under its quote-unquote fair value. What I found interesting when I was looking at this company that I wasn't expecting from a business like this is, unlike lots of those other companies that aren't profitable, don't have line of sight to profitability, losing money, MSG Sports is actually announcing a plan to return more money to shareholders. So they're passing on $250 million to shareholders through a one-time special dividend and share buybacks as well. This is relatively unusual in the sports space in terms of the public markets, but I would love to see this if I was an investor in the company. It shows that they do truly care about the current shareholder, not just protecting the asset for a future sale or for future generation, which must make people who are owning the stock feel good about their, decision to hold on to a company like this. Looking at their valuation. So the company has run up throughout the year. You can kind of see 190 today. They're trading at 140, 150, 160 for a number of years actually. So they finally kind of broken out, probably on that news that they're returning capital to shareholders. Shareholders probably like that sentiment. And then also on the news of some other big sales that have taken place in the sports space, probably has them feeling more confident on the value of their relative asset in the Rangers, given the Penguins just sold for a lot of money, much less important franchise in the grand scheme of things. And then NBA teams also selling for record amounts as well, not to the caliber of the New York Knicks in terms of history, not current performance. So this is a company that owns a lot of really great assets, no sale coming up, returning capital to shareholders periodically. I wouldn't expect like a quarterly dividend or anything like that, but I really love to see that buyback announced. So this is one that I think is more like a true investment in sports franchises if you want to ride a longer wave. And something that I'll note that's interesting is we look at these stocks, with the exception of Endeavor, over the last year, the overall market's down, but these are not typical companies or typical assets. They really are a bit of a hedge versus the overall market. You have MSG up probably 30% over the last year. You had F1, which is at an all-time high pretty much currently. And then you had WWE and Manchester United, which I know is being driven by buy speculations, but are also around all-time highs. So these assets don't really care what interest rates are, don't really care what alternatives in the market are because they're so scarce, they're so unique. And while they don't generate a lot of cash flow and ongoing shareholder return, it's really just a unique space to own an asset from a portfolio and hedging perspective. So my thoughts on this space in general, and for those of you who have stuck through this whole video with me, thank you. My throat's getting a bit raspy for those of you wondering why I'm pausing a bit. But I think this space is definitely interesting. At the end of the day, I think what you're betting on is the continued cultural importance of sports in society, and that paired with the continuation of super, super wealthy people continue to be more prevalent in society and wanting to spend their money on something, them fighting over it, the bids getting up and up, and people who are worth tens of billions of dollars being willing to spend 1, 2, 3, 4, 5, 6 billion of their dollars owning a team, because that's kind of just like a cultural I made it kind of moment and story for lots of people to have. And lots of people, if they love a sport or a particular team, that's like a dream come true. So definitely a unique asset class. Not one that I in particularly like, just because I prefer sleeping good at night, knowing the price to earnings ratio, knowing when I'm going to get my next dividend, knowing that shares are being bought back for me and I'm getting constant shareholder returns. Whereas an asset class like this is not really a cash producing asset as much as holding something for the long term with the hopes that someone will buy it back for more money or the value of it will go up over time. I don't want to compare it to holding something like gold, but it's kind of like that in a sense where you can't really expect it to pay you dividends, to buy back shares. All you can expect is for billionaires to be fighting over these assets at higher multiples or higher prices in the future, which will then indirectly increase the value of your asset. That's the way I see it. I could be wrong, but that's my thoughts. So I'm staying away from this space, but as a fan, I love following these stocks. I love lots of these businesses, just not in my portfolio. So if you guys like this video, please consider subscribing to the channel, liking the video. Would love to hear your thoughts in the comments if you own any of these stocks or you're looking into any of these stocks. And if you've held on to the end of this video, I really appreciate it. And I'll see you guys in the next one.